Hey everyone, welcome to Market Talk. So today it's the two of us, Raphael and I, and actually I'm very happy because today is a perfect day for our show because we see a lot of interesting movements in the markets. Today was definitely a day where a couple of important assets reached their levels and we will talk about it. So yeah, of course, it's dollar, gold, nothing interesting in indices, at least for now, nothing changed, but still a lot of things are going on. We have a lot to talk about. Before we start, I want to remind everyone watching that my fractal range is a risk management platform which is helping investors, both retail and institutionals, to manage their risks and manage their portfolios. And if you have not tried my fractal range, you can always take a free trial and try it out. Okay, so Raphael, I'm sure a lot of things is happening. I know that you have a couple of great positions running, and today we had this massive drop in gold, also the euro. So what's going on? What do you see in the market?
Yeah, the past 2 weeks have been exceptional, but I think I saw somebody tweet like if you didn't make any money in the past 2 weeks, you basically should stop trading. I mean, for real, it was if you respected the levels, if you watch the volatility, it was an easy 2 weeks. So for now, I'm still long ES, I'm long the DAX, I'm long Nikkei. I got out of the short Euro USD, so I will explain why and why I may enter again. I got stopped on oil. I was dead wrong on this one. Got stopped on Bitcoin today. Still long NVDA, still long Tesla, and I'm long Amazon, but it was really painful to trade this one to get a good position. So I'm gonna go over everything. I'm gonna talk also about some things I'm starting to see in yields as well, and some stuff happening in the dollar. So let's share the screen. Okay, so so 2 weeks ago, I had some puts. I bought. It was Monday or Tuesday on the 22nd and 23rd. Got out of half of it at one of the target provided by Vi and got stopped. I think it was on the 29th, no, not on the 30th. So I posted it because so getting stopped of the bearish bet, plus the fact that I saw that Nikkei was not selling, something also that I mentioned in the show 2 weeks ago. I was gonna watch what Nikkei was gonna do the week after. Made me switch back to bull. So the easy trade, the cheap trade, like Vi always mentioned, was on the first day of the month. It tried to break and reclaim actually the open. So went long at the open of the month. So 6725.5. So far, I haven't reached any target. So I'm still long and holding. And looking at the target for the month, it's quite impressive because you have a monthly target at 6,900. So maybe via some other targets to mention that could be in this vicinity, but as far as I can see, the first target is there. So I hope that you guys took this cheap trade. The stop is break even. I'm just looking to get this nice ramp up. So far, I'm not seeing anything worrisome. So holding the ES trade long. Now regarding DAX, so this one, I've been watching it for some time, was eager to get in and finally got the entry. So what happened? Usual setup, you get volatility in blue here, starting to make a lower high, lower low, indicating a potential trend change. and entered on the break here around 23.9K. So yeah, I've written the entries. The next day, we reached a confluence of monthly and quarterly target. So around 24,400. I'm going to show you the target also on quarterly. Yeah, here. So basically in 2 days, you already reached the monthly target. So now I'm just enjoying the ride. The next target is around 25.1K. I think you have no target here on monthly, but Vi already explained how you can get it. But yeah, I'm looking for the next quarterly target. Stop is below this candle, so I'm just holding. And this setup, I know a user asked a question about how to use the volatility indicator. So maybe at the end of the show, I'm going to talk more about that. But the setup was ideal. So yeah, anyway, I'm going to talk about that later. The Nikkei. So I was watching this one, considering the relationship the Nikkei has with tech sector in the US. And when we had the last show, I was saying, okay, if Nikkei is not going down, it will be a signal to go long risk asset again. So what we had was a retest of the low of the range. You started to see volatility go down. I took the long here around 44,800, and same as DAX in 2 days already reached the monthly target. So now I'm just holding a runner. Next target will be the next monthly target, which is also a confluence with the quarterly target. I'm going to show you. So basically in this vicinity, I will be looking to exit the position. This thing can run, I don't care. We talked about that in private with Ted. He actually took the same trade. But yeah, I would be quite satisfied if we get there. So holding this one as well. That was another cheap trade to take. Now Euro USD, and I'm gonna take a detour with DXY afterward. So we explained the short 2 weeks ago. I know Vi was also short at the time. I took most of before the last show, the last time, and I was looking for the next target here. So that's also a monthly target. I decided to cut the trade as we were retesting the trend. Another reason was that DXY already reached its monthly target. So I was eager to see if finally DXY would confirm the break of target. So if you were short, I think this area was a pretty good place to take it out and watch what was going to happen. So now going to DXY, in my opinion, so we talked about that in the last show, we are starting to see some indication that DXY was trying to transition to bullish trend. Volatility was making lower high, lower lows, and you had the cross of trade and trend volatility here, which is indicative of potential change in volatility trend. And I tweeted, if this thing rips, and do not hesitate, we have a confirmation of the trend change. So what happened the past 2 days, so yesterday and today, it seems to be running. So we are target here. This is monthly target, and today it broke it quite easily, quite strongly. So in my opinion, I think maybe this is the start of a good bull run in the dollar. So I monitor this one. I'd be very interested to take another shot at the Euro USD position again. But yeah, in my opinion, we finally get the move that we were expecting already for a few months. Now let's go to VIX. So if you look at the volatility of VIX here, trade down, trend down. So I'm looking at the volatility of it. Huh? Volatility itself down. Something is gonna happen in the VIX. Okay, so yeah, I mean, if it was an asset, if it was, for example, Bitcoin, I'd be longing it. I'm not longing the VIX because it's a mean reverting asset and you can lose your hair doing that. But if it was an asset, I would be longing it. The only question is, okay, uh, when will this move happen? So I'm setting stops in every position I have with very tight risk management. My thinking is still the same as 2 weeks ago. We have entered the phase where volatility will manifest more drastically. You should see spikes in VIX, then sell-off in VIX in a more compressed manner. So my opinion remains the same. You should be very careful until at least trade here reaches the minimum target where you could expect a spike of volatility of VIX, meaning that VIX would definitely mark a top and then start the next phase to be safely long the market. But for now, in the back of my mind, I'm still monitoring this, and I would not be surprised to see someday, maybe in October, a big spike in VIX that would surprise everyone. So, despite the fact that I'm bullish, despite the fact that I only have bullish positions, this thing should always be in your mind. So, I told Ted in private that I would not be surprised to see a retest of trade, maybe in this area, 15, 14, maybe just to suck every last bears in to turn bullish. Basically, the blow off top that everyone is talking about. So my bias is still that I would expect maybe a retest in this area before we get a shootout in volatility. But my bias doesn't matter. The fact remains that if it was an asset, you would long it. So something is going to happen. I have no idea when, but every day I'm monitoring. Every day I'm thinking, okay, until this black line reaches this black line here, the first mean daily trade, I'm going to be very, very careful. So just a quick detour regarding this first mean daily trade. So what you do is every asset has a vol profile. Most of the time it will repeat. So for example, in this case for VIX, anytime trade of volatility reaches a particular mean, volatility of VIX will start to rise. So what you want to see before jumping with 2 feet again in either a bottom or another leg up in the bull would be this thing to reach this trade of volatility of VIX reaching the first daily mean. And then what would happen is finally volatility of VIX will start to rise, and this is where you see VIX going down, and basically we start the cycle over, and this is when you get very nice leg up in equities. So I hope this thing is really printed in your mind because it's quite important. Okay, so CL, where I was wrong. So what I did was I longed the CL, expected the volatility to go back down. So you still have the arrow from the last show. Volatility was doing lower high, lower lows, perfect setup. I also mentioned the fact that Brent was actually starting to show the same kind of volatility profile, and boom, rejected the potential transition to bullish trend on MFR, and this thing just started to unravel. So I got stopped. I was wrong. Um, Volatility seems to be not there yet. So I'm gonna keep monitoring this one, but so far it's not working. In the show we did last week with Vi, I think it was, yeah, pretty simple, but quite easy to understand. Vi just uh, look back on the CL on a larger scale, on a larger time frame, and just show, okay, this thing is just bearish for month, and maybe you should wait for more confirmation before going long. So it was a mistake. The setup was there, but yeah, it didn't work. So I'm gonna keep monitoring, but for now, not long oil anymore. Now to uh, this monster that is gold. So for now, trade of volatility here in black still hasn't reached the daily mean two. Okay, we already crossed daily mean one, and in the last show I said, okay, I was expecting a sell-off. This sell-off was like a sell-off for ants, and okay, it didn't work, so expected the next leg up. For now, I don't think this sell here um, will materialize in a larger sell-off because we are not still in trade of volatility still hasn't reached daily mean two. I would expect a larger sell-off to happen when trade of volatility reaches actually those levels. So for now, I'm not expecting this thing to continue. I think it's going to be bought, and the move will continue until we get there. One concern though is volatility has spiked up. Okay, you can see blue here, volatility has spiked up. My expectation is this thing is gonna go back down. So let's see. I have no position in gold except physical, and silver also physical. So I don't really care. I don't have a position in the market. I think Vi will talk more about gold because he's got a position in it. But yeah, so far I don't see any concern, at least for now. If volatility start to make higher highs, higher lows, yeah, okay, maybe you get a larger sell-off, but I don't think that's it. No, another one. So Bitcoin, I got stopped today, and I mean, I hope, I hope that it was not a mistake. Okay. I don't think it is. This is a process. I mean, you know the box, you know the volatility box, right? The process is you get out when it goes over it. It went over by 0.1 point. So volatility blue here went to 4. My box is 3.9, so we are barely above it, but process says get out. So in the last show, I tried to go long on the dip here at 112. And Vi was mentioning that we were looking for 108K. It was one of the levels provided by Vi. So waited and entered back at 110K. Added when volatility broke inside the box. We reached the first monthly target at 123, 124, and took some off there. So process dictated to get out 121. If tomorrow the volatility is back inside the box, I'm gonna get long again. I don't care. It doesn't matter. This is a process. So if you got stopped out because you are watching this get out, don't freak out. We already made money. Now, the idea is, okay, tomorrow, if this thing gets back down, just buy again. One concern, and this was also mentioned by an astute user, is the fact that we have a cap. For now, how to say, we don't know if it's important. because we are on the first day where we get a potential volatility spike or potential just to get back inside the volatility box. So tomorrow, depending on where the vol lands, I guess we will know more. The the cap will usually disappear in two manners. If the bullish trend is confirmed, so let's say volatility gets back inside the box, what happens? Usually, most of the time, the top of the long-term range will start to rise again. It won't matter if the normal range don't move at first. What will matter is if the long-term top of the range move higher. So that would be of interest to me. The fact that the cap is there is not very surprising considering that we have here a little spike above the vola box. On the opposite, if we start to see volatility rise here, I would not be surprised to see the long-term range not move, but the short-term range start to go down. So this is the thing that you should monitor. Okay, this is the behavior that you should monitor in the range. So tomorrow we want to see this thing close below, and we want to see the long-term top. Okay, and if this blue line continue to go higher, we just don't take the position. We wait for another entry. So that's the way I'm going to play it. That's the way I play Bitcoin. It's been quite good so far. No reason to change. Now let's go to yields. So yields is starting to show some interesting stuff. So we had a dip in bonds. I think it was the day of the show. So we said it was a reasonable place to buy bonds, and it worked quite nicely. The reason was quite simple. Yields have broken to a bearish trend, and we were just retesting the trend. So that was working nicely. Some things are starting to materialize. So what I'm starting to see here is volatility starting to make lower highs, lower lows. You can see the same thing happening in the 10-year and also 30-year. Okay, so usually this kind of behavior indicates a potential change in the volatility profile. So what you would expect if you extrapolate would be volatility starting to go down. If volatility start to go down, the assets start to rise. So yields will start rising, and of course bonds. So SHY, IEF, TLT, DV zeros would start to fall. So this is something, if you are long bonds, that you should be monitoring. If volatility start to continue here to go down, maybe you will consider to at least decrease your position and wait to see what happens on the next retest of trend. Okay, so this is something that you should have noticed if you watch the volatility of yields. Now let's go to the nice positions. So NVDA reached its monthly target at the end of September. So 185. If you are long, 170 was the previous monthly pivot. So that's why I took the position there. So you took some out. Here you had an opportunity to add. I didn't. Okay, I didn't. I'm happy with the position I have, so I didn't add. I'm looking for the next monthly target, so 198. That would be where I would take some off. The stop is below this candle here at 180. Okay, so this is the position regarding NVDA. If you took it, this is what you should be looking for. Tesla still holding. The position is starting to become quite tiny. One reason is I started to unload some here at 443, which is a pivot for this month, because it tried to go but failed. So usually when you see that, it's not that good. It doesn't mean that we can't reclaim at this level later this month, and we start to rip. But when I saw this, I started to unload some more. So my current stop is 402 below this candle, and the next target is the next monthly target at 513. But yeah, it's quite different profile than with NVDA. The fact that the monthly pivot is not being reclaimed strongly uh, is making me a little uncomfortable. So when I'm uncomfortable, I just decrease my position. Now the one that caused me a lot of trouble. So Amazon. So this fucker really was a tough cookie to trade. So I tried to go long on the last Tuesday on the confirmation of the break of the annual target. So here is how you change it. So basically annual target is the annual open. So to make it simple, we are reclaiming the open for the year. People will be starting to look for a buy, and this is when you go long. It's another cheap trade. The stop is usually right below the pivot, and you see what happens. So took the position. The very next day, I saw it open. I was like, okay, I'm a genius, and it got stopped the very same day. Luckily, the day after went to the monthly pivot. So I'm going to show you that here at 218. Okay, I saw that it broke, start to reclaim. So I bought this one. I was like, okay, let's go. It went to the annual pivot. I said, I'm not adding there. I'm not touching this one. Let's see if it holds. And so far, it's been holding. The first target is 228, 228 and 228.55. I decided not to wait for that. I took some off at 227 today. The stop is below this candle, 221, and the next target is 239, which would be quite a move for this stock. So yeah, I unloaded some, moved the stop to profit, and now I'm waiting to 239. But this one, yeah, very difficult to trade. I think I tried it several times before, got stopped. The annual one, I was quite confident, got stopped. And fortunately, we had this candle here, and finally, this one is working. So volatility is starting to make lower highs, lower lows. So in my opinion, this is a change in the volatility profile, which is good. You want to see that when you are long something. But yeah, that's the last one. I think I've covered it all, right?
Great insights. Yeah, and nice positions. Very good job. Uh, my main topic for today will be the fact that now we are basically inversely trading the dollar. That's the only thing that is happening, especially in equities. And I saw that there are also questions on Twitter about that, which is great, but actually, that is the most important thing currently for me. And it's dollar correlations. And now we see that because of dollar finding, at least showing some signs of strength, then we will see maybe this fast rally in stocks will become a slow rally. I still don't don't see anything worrying regarding when it comes to the stock market, but I really see that what is happening now, it's basically the dollar play. And I saw a funny tweet today that, oh yeah, so the only thing that dollar needed to go higher is lack of economic data. So yeah, now they are not announcing economic data, so dollar is rallying. But okay, so what we see from a correlation perspective, and first I will start with 21 days, which is now, and if you see UUP red across the board, and SPY minus 0.47, TLT minus 0.36, QQQ a bit less negative, but basically negative across the board. But now it's not the most interesting part. The interesting part is what is actually happening currently, and the situation is absolutely crazy. And we see that stock dollar correlations are deep, deep, deep in the red, and we see SPY minus 0.61. If we take DIA, for example, it's basically almost -1. So keep that in mind, and then we can check the historical correlation. So if we use SPY, then we will change the chart to UUP, and then I can simply go here. I can simply go here and 10-day correlations of SPY and UUP. So as shown in the earlier in the correlation matrix, current value is minus 0.61, but basically we're in very low regime. And now it's basically a dollar trade, but the inverse dollar trade. So if for those who are interested in equities, I saw there is another question about average sector correlation, which is of course the thing that I will talk about because I watch it every day and it's important. But for now, I see nothing. That is the main reason why I said that I still see that indices are doing what indices are doing. One day it's 20 points down, the next day it will make new all-time highs, and so on. So at least from today's price action, I'm not more worried than I was before. Basically, same. Uh, when it comes to yes, above 66.58, we are targeting 69.83. That's the plan. And the main change will happen when the ES goes below 66.58. But this is the thing, and this is the thing, and watch dollar correlations because this is very important. If we get a rip in dollar, of course, we will see slight reduction in negative correlations, but they will still remain negative for quite some time, and I don't expect that to change. Okay, so now let's stop with the correlations and let's go to the average sector correlation to the SPY, and it's low. No surprises. It's low, nothing changed basically. There is no panic, there is no excitement. Correlations will not stay low forever, but they are low and they are going down. And when market is going, what it basically means when market is going down or the market is going up, not all stocks are going up or down. We can talk about dispersion, and I believe in one of the shows I showed a very useful index that CBOE has. It's called the SPX, I believe, if I'm not mistaken. So that one is also not showing anything concerning. So yeah, basically, it's a story of dollar trade and tech trade and the uh, things that are happening in the commodities markets, which is we will touch on that a lot because a lot is happening in the commodities markets. Um, okay, so average sector correlation is low. If we, maybe I will change the period also to 21. Yeah, also to 21. And let's see what's happening there. Yeah, and as you can see, nothing changed. So, as I said, average correlations are very low. Some stocks go up, some stocks go down, but bigger stocks are going up way more. That's why indices are ripping, but the stock market is definitely not in agreement that all equities are a buy. Definitely not. But the thing with bubbles is that if you want to go broke, you need to fade the bubbles. And the thing with bubbles is that while it's continuing, you need to ride it. And the most important factor is to have very strict rules when this will stop working and when you need to get out, because otherwise, of course, you give everything back and maybe even more. But yeah, this is the correlations, and keep that in mind because I usually talk more about average sector correlations to SPY, but today my main concern is the dollar, because that's the most important thing. So yes, yeah, let's go to yes. Today we had this small dip. With Raphael, we were talking before we show it. It's nothing. It's just what indices are doing. So as mentioned earlier, we will be in a buy zone all the way to 66.58. 66.58. If you watched the trading plan video, the mid-quarter video, you know what these numbers are, but yeah, ES can go down another 100 points, and we will still be all right. Upside targets are 69.83, and of course we will only talk about the other targets if we go above 69.83, which is not the case for now. So yeah, we have another target of 68.33, and then of course we have uh, our monthly, quarterly, and annual targets that you have access to. So you can check that. As Raphael mentioned, open was for now a good break of the open was a good place to execute. But for now, yeah, nothing is happening. This month is not negative, not positive. Nothing changed from a perspective. And when it comes to yes, I remain long. Yes, I remain long some other indices, but yeah, when I see people are calling tops, don't call tops, don't call bottoms. Execute when you see that the bottom or the top already formed. For now, at least from what I can see, top is not in. So this is my view. We can get a dip, but because of this overextension and this huge rally that we had, even 100-point dip will not change anything from the view perspective, unless, of course, other signals change. But this is not the case now. Yeah, so this is yes. We have targets. I will talk about gold because today I added to gold quite significantly. And yeah, again, same situation, quarterly trading plan video. We talked about 39.60 in gold, and first 39.60 is a very important level. I tweeted that level at least once, I believe multiple times. This level was derived from the expiration prices, and gold is so overextended that even if gold falls 200 points now, our pivot is 37.75. But of course, I don't expect that. 39.60 was the target derived from these expiration levels, and today it held. And at 39.60, I bought more gold. I still think that gold needs to go to its second target of 41, 47, and then we will maybe see 44 handle, something like that. Because also I wanted to say that when it comes to gold, it's not an inflation gold hedge. It's not. It has nothing to do with inflation. It's a hedge against central banks' stupidity. Basically, that's all it is. I learned it from one of my mentors back in the day, but it changed a lot when it comes to my view about these assets. Because yeah, why gold is going. Of course, there are now other reasons, many of them, and everyone has their opinion. But basically, it's a market's way to save themselves from whatever central banks are doing currently, which no, not only in the US, but actually in the US they were the smartest because what's going on, the other central banks who were cutting rates. like crazy. Yeah, so of course, gold market smells it. So this is what, but that's my only take on macro because I don't trade based on that. But for the 960 market down in the gold futures, I believe we may even no, we don't have the mark, but for the 960 is the level which is very important level, and below for the 960 we can go all the way to 37.75. Keep that in mind. This is my only position that I'm holding in non-equities related assets. For now, I will talk about bonds later, but for now I see nothing interesting anywhere else. Silver and gold is the places to be, at least for now. And if we go to silver, I can actually go to silver and you will never see a level that I'm about to show on regular charts, on regular continuation charts, on retail trading platforms, but the Hunt Brothers squeeze that happened in 1980, because even if we go to annual chart here, it will not show you that because they roll it in the wrong way. But I want to show everyone the level. So your platforms usually will most likely say that Hunt Brothers high is something small, but actually in 1980s the January contract went to 50.36, and I'm now looking at this level that no one is seeing. Yeah, this one is correct. 2011 high is correct, but it was not the highest price where silver has ever traded. January 1980 contract in silver made a high of 50.36. So this is where a lot of long-term stops are, especially in the institutional space, because others, of course, don't know this. But I will keep this there. 5 year. And this is the thing. And there is a huge amount of stops in silver above this level. And when I say huge, if silver goes above this level, you will see $53 very fast, just because of the added momentum in buying. Yeah, but basically this is that. And 49.82, which was 2011 high, is still also not in place. So, oh, today it made it. Yeah, sorry, I don't have my alert. So yeah, so this one is taken out. Now the only one which is needed is this 100 hours high. So it's not the top, in my opinion. I have no reasons to think why someone would need to sell all their gold or silver exposure, reducing at levels and targets. Of course, that's how we reduce our drawdowns, and that's how we make consistent money, at least some. But for those who say, "Oh, gold top," no, I disagree. I don't think I see no reasons why gold topped. Gold is above 39.60 level, and the next target is 41.47. That's all I want to know. I will get rid of my reduction, sorry, if my of my addition to the position if gold trades below 39.60 tomorrow, but I will keep what I had. I will just get rid of of the position that I added today. So this is my view. Now we will go to bonds. And ZB, for ZB, it is trading exactly at our pivot, which is 116 and 25 30 seconds. So technically, what is going on, this radiator, this chop in bonds, is not showing any signs of increased bid, increased interest in bonds, and the main reason, again, I think, why we don't see a strong bid in bonds, because all our signals show that there should be a strong bid in bonds, is because the bid is in gold. And for me, it makes sense, and this is the reality that we are living in, and this is the reality that we need to trade. So for now, bid is in gold, not in bonds. And when it comes to ZB, this is the most important level for our entire quarter. Actually 116.25, and it struggles to strongly close above it for a long time, and we don't see any signs that it's about to go. Same with ZN, 112.27 is the level, and we are trading at 112.15. We are flirting with the open pivot, so yeah, and we can see what the targets are showing. Yeah, so now we are at monthly and the quarterly pivot also, and below the previous settlement level. So for me, bonds is not a buy if you plan to execute here. If you're holding it from way lower, yeah, fine. But here I'm not a buyer of bonds. I choose gold. Well, gold just because for the reasons I mentioned before. But the process is very simple, and the plan is also very simple. We have targets. If we get a dip, the next place to execute in bonds would be at 111, which is quite scary, or at 112, which is another important level for us. Of course, we have previous explorations at 114 and so on, but for now, the most important levels are these. And don't try to pick tops and bottoms. If you see a sell in bonds, don't try to step in front of it. Yeah, actually, very interesting situation with oil. Yesterday, I also thought maybe if we close above the most important price for this contract, which is 62, 64, that if we close above that price, maybe I will buy some. And I even tweeted that oil is a bull, but well, as you can see, it's not, and it has not closed above it. So yeah, and what is that price? For those who are wondering, it's the expiration price of a previous contract, which for oil was October contract, which expired in September, and that price for us is 62 and a half, basically. So no, don't touch oil. I see no reason for now for us to touch oil. I have a lot of levels marked down for oil where I'm interested in, and I had these levels for the entire year, but yeah, from level to level. And now basically we can see a trip down to 59, or at least below 60. So we will see what's going on here, but this is the most important. These are the most important assets that I had to cover because, again, views regarding equities are still the same. There's not a single reason to start panicking and getting rid of all your equities, but watch the dollar, and the dollar will guide you, at least for now. And this dip in stocks is not a dip at all. We can get a deeper dip, but what's happening here is nothing. And from the range perspective, still, we have plenty of upside, and of course, in the middle of the range, so we don't execute here, and in the middle of our target, so there is absolutely no reason. If we use macro zones, we are also almost in the middle. If we use targets, we are above the open, but we have long way to go to our targets. And if you want to get correct targets, the ones that I'm using and the ones that make sense price-wise, make sure that you never ever have this button enabled in your TradingView platform, because then your numbers will not make sense at all. I think from charting and analysis perspective, this put a button should be illegal, but it is legal. So anyway, yeah. So I don't know. Most likely we will keep our show short today. Raphael will check if we have any questions. But why I'm not talking about any single stocks, because first of all, nothing have changed, at least in the space that I'm watching, but I have no positions in any individual equities. I have some positions in indices. DAX is long, Nikkei is long. I absolutely agree. My target for Nikkei is 50,700. And my opinion will change if we go below our first matrix, which is 47,7 something. I can actually give you the exact numbers for DAX and Nikkei, so in Osaka, in yen. Let's wait for it to load, but basically for now our pivot is 44,440. Our first target was 47,570. We are above, and then it's 50,700. If Nikkei goes below this, I don't know if I keep my positions, but I will definitely take more off for sure. And the DAX. DAX is actually previous expiration was not important. We need to use uh, expirations that happened before, maybe even March expiration. Why this one is not important? Because U contract expired basically 200 points above the June contract, so it's not telling us anything. But for the DAX, which is currently trading at 24,700 or something like that, I will give you, yeah, 24,700. For the DAX, we have levels at 24,976, and our pivot is 23,633. So DAX is really strong. Basically, we are 1,000 points above our pivot for DAX. And here are the targets. So we were flirting with quarterly targets yesterday. Today we spiked all the way to the second monthly, and now we got this dip because, of course, everything is great in Europe. So when only the European session was open, everything was ripping. But when Americans joined, then DAX dropped. So because that's not what we do in Europe. In Europe, we only buy stocks; we never sell them. Okay, jokes aside, and this is my view. So still, to recap, very bullish gold and silver. Neutral on bonds, definitely have no plans to start shorting bonds, but I need to see some strong signals for me to start buying them. But yeah, very bullish on gold and silver, remaining bullish on equity indices, and will remain bullish and will remain riding at least the remainder of position and remainder of the trend all the way until we break the pivots. Yeah, so this is what I had in mind.
Very, very cool, Rai. Okay, so you answered the question from Raga regarding
Yes,
the
yeah,
dollar,
yes,
and he's got another one. So core 1M, so I would guess correlation 1 month is below 8,
yes,
very
I
low.
know.
So can I
I
consider?
I have a playlist. I have even. I will say this. Wait, I will share my screen again. I believe I even have somewhere. I think so. Yeah, even a watch list with also I take usually I'm monitoring a lot of things on my quote boards, but I need to read the question. What is the actual question? Because we're low and we have a buy as well. Can we? Yeah, so it's the same. The reason why I'm not watching all these things all the time, and I just created a simple metric, which is the average sector correlation, and then simple correlation matrices, is because uh, can it lead to a higher move on any side? Yes, of course. It's always like that. Of course, when correlations are very low. The only thing that you can expect in the midterm is that correlations will go higher because correlations will not remain low for years and years. But which direction it will be, which asset or which sector will take a lead in that change, we don't know that, and we need to change our views based on new data that we have and trade from levels to levels. And the only reason why I always start the day from correlations is not because that correlations are telling me that today I will buy this asset and tomorrow I will buy that asset. But because when I see how all these sectors and dollar and gold are related, how I enter some positions in indices, for example. Um, when I'm interested to buy something. I watch where gold is trading. I watch where DX futures are trading. I watch where oil is trading, and what and based on these correlations, I can see that okay, we today we had this dip in gold correlation is this and this. Yes, almost reached the open. I'm just trying to give an example. It's not what I did today, but okay, yes, almost reached the open based on correlations and what the gold is doing. And because gold reached very important level, I expect gold to go up. And just because I expect gold to go up and correlations are telling me this, maybe I don't want to add to my yes. Uh, Maybe it was confusing, but for me, it's actually the easiest way to think about things. Yeah, so
Okay.
I confused everyone.
Yeah, I'm used to your rent, so it's okay.
I
So
mean, I expect gold to go up. So then my question should be, do I want to buy stocks too or not?
I mean,
And correlate.
the time to go long gold was when actually you went long gold because I remember you always say gold is crap, gold is crap, and then you turned bullish. I was like, okay, something's
Yeah,
definitely.
actually, I remember for years when we started this show. Yeah, I was not. I mean, Raphael was always talking about gold, and I said, I mean, but the reason why I monitor assets that are doing something. We all know that for years, gold and silver, especially silver, it was not doing anything at all. And then suddenly gold started to do something. So of course I'm interested because uh, my view and what I help my clients with usually is not based on some specific allocations. I want to be there where the action is. I'm not talking about day trading. I'm talking about bigger moves, of course, but I want to be where the action is. If for example, I see an asset like oil, oil now is a perfect example. Of course, the time frame is short. We're only talking maybe a couple of months, but oil now, I mean, it's doing nothing. Then the question would be, why would I want to touch that? When I see a huge break from some important level, yeah, then we will talk. But at least for now, no.
There was another question regarding the volatility indicator. So I published several months ago actually a video regarding this specific indicator. I went over it in this video, but yeah, I can give a quick run through, but very quickly. Okay, give me a sec. Let's take a good one. Let's take Tesla. I like this one. Okay. Okay. So let's share. Okay. Let's hide everything. Okay. Oh my God. Okay, so uh, you are each asset has its own volatility profile. So you have assets that trend very well. You have assets that actually do the radiator stuff that Vi is talking about. Basically, these ones, it's better to use a range rather than trend to trade them. This tool is particularly useful for assets that trend well. So first of all, you should know what asset trends well. So best would be, okay, just take this script and check the stocks, the assets that you like to trade or would like to be trading, and see if they actually trend. So that's the first thing you're going to do. It would be useless to use this indicator on something that actually never trend. Second, so this indicator here, so this volatility here, will give you three information. Number one, what is the volatility of the asset? That's the one in blue. So my idea when I designed this script was I need a VIX for every asset. Okay, so the blue is the volatility of the asset. Then in black, this is trade. So I want to know on let's say medium term time frame what the volatility of the asset looks like. The idea is on a short term to medium term basis is the volatility of the asset trading, so trend on a shorter time frame. So that's what the black line gives you. Then you have the red and the green one. This is on a much larger time frame. So it's volatility trend. So again, the idea is on a much larger time frame. What is the volatility of the asset doing? Okay, so that's the three information that you get. What you want to see in an asset that you want to be long, you want to see volatility pointing down, you want to see trade of volatility pointing down, you want to see trend of volatility pointing down. It's the relationship between volatility and price is quite simple. If volatility is low and trending lower, the asset is in a bull. It's going higher. That's the inverse relationship between volatility and price. An asset with a rising vol will either be in a chop or will either be trending lower, right? Anything volatile will give you prices that move I don't know, like 3, 4 points in a day. Nobody wants to ride this. So people want to ride stuff that have low volatility. So the idea is, okay, if I want to be long something, I want volatility, trade of volatility, trend of volatility to align. I want them to point lower. This will give me a good indication on the fact that because volatility is trending lower, more people are going to trade this asset because the price is stable, volatility is stable. So this is the idea behind the volatility indicator. Now regarding how to use for entries. So let's take one stock that really worked quite well with this indicator is Tesla. So basically in this scenario, what would you be looking for? So of course you will be looking for other stuff, right? Not only this indicator, but if you are watching for confirmation regarding volatility script, what you would be looking for is the volatility here, volatility trade going lower and actually crossing trend. So short-term vol will be crossing long-term vol. This would be a signal that, okay, something is definitely aligning here. So this is where most people would start to accumulate. It would be a bet that they take that this move that we are seeing in a short-term trade, short-term vol is going to continue. So, for instance, if you are looking at this indicator, this is where the places where you would buy. Here, first across, then anytime the price retests the confluence between short-term vol and long-term vol. So this is where you would be accumulating if you were looking to buy Tesla. And then what happens is people start to notice, okay, wow, this asset is actually having a very stable vol. The volatility is quite low. And uh, everyone, let's say the normal people are going to start to buy here and are going to perpetuate this move higher. But what you want if you are looking for accumulating for long-term hold is to buy here. Okay, that's what you would be looking for. And then when you get the move, this is when you start to look for exits. This is when you start to unload, etc. So in that scenario, volatility indicator is not that useful. You would turn to targets, you would turn to MFR range, you would turn to other indicator. So that's to take the position. The second interesting part of this indicator is when should I totally get out of the position? So the way I do is I actually check the historical minimum for trade of volatility. So the black line, I check, okay, the last time this asset went parabolic, where did trade of vol go? And I'm going to check in the past. Okay, the last time Tesla had a ramp like this, what was the value of trade? And I mark it, just mark it. Let's say it's, I don't know, let's say it's 4.7. Okay, I mark 4.7. When trade gets there, I'm like, okay, the last three times this asset ripped, this is when volatility is starting to rise. And like I said at the beginning, when volatility start to rise, this is when price start to go nuts. This is where people are starting to unload their position. So what you want to know is what you want to do is to get out before this thing happen, right? So that's why marking the mean is also very important. So you see me always with gold talking about the daily mean. These values are derived from previous tops in gold. And they didn't happen only once, they happened several times. That's why these values matter. So I use the indicator in two ways. First, to enter positions, and second, to really consider like exiting before the volatility start to climb back up. The idea being that at some point, trade of volatility is so low that volatility has no more room down. If volatility has no more room down, the only place to go is up. If volatility goes up, price goes down. Okay, so that's a quick run through. I made a dedicated video about it on the MFR channel. You can go there and I go deeper into this. And send me a message on X, either a comment or something, or send an email to MFR email. I will answer. Okay, that's it.
Yeah, thanks. Very useful as always. So if we don't have any other questions,
No.
then I think it's time for us to wrap up. Again, I expect a lot of movements in the market in upcoming 2 weeks. So manage your risk well. Use pivots and targets as the guide. And see you in 2 weeks. Thank you, Raphael. Thanks everyone for joining.
Thank you, bye. See you in 2 weeks. Take care.
Yeah.